Alright guys, welcome back to my YouTube channel. My name is Ambassador Truxpo. If you are seeing me for the very first time, I'm a forex trader, and on my channel I tend to document my forex journey, right? How I approach the market, how I trade, the strategy that I trade, how I take my trades, right? In order to help the newbie who are starting out to be able to learn a particular strategy, learn how to approach the market, and for the advanced traders to be able to show them how they can be able to add up some things to their strategy and become profitable with it. So on this channel is focused on educational purposes, strictly for educational purposes, not for daily vlog, not for day in a life, not for entertainment. Is strictly for educational people. So if you're a forex trader and you're coming across this channel for the very first time, please subscribe, turn on the notification bell so that you always get notified whenever I drop content like this that will help you to grow in your forex trading career. So on today's video, we are looking at how to map out the ultimate supply and demand. The ultimate supply and demand. So I understood that a lot of people still find it difficult on how to approach and find out the actual supply or the actual demand zone that they are supposed to be looking at for in the market. So here we understand that price basically moves in structure, and whenever price breaks a previous structure, there is something that makes that structure to be taken, right? Which is institutional move, right? Or aggressive push, or strong buy, right? So when price is in an uptrend, right? If price is in an uptrend and price is breaking structures to the upside, we tend to see something like this: price break structure to the upside, which we call BOS, and retraces back to the origin that caused that break of structure, right? Many times you see price tend to come back to the origin that caused that break of structure. So first of all, we need to understand that whenever price breaks structure to the upside, price have created a new high. This is a new high here. Let me mark it out. Please follow me very gradually. This class is going to add something very crucial to your trading career. So here, once price pushes up all the way here, you saw this was the low. This low caused this break of structure here. So whenever this happens, what are we looking out for? We are looking out for this particular low. We are interested in this low, right? And we are interested in that high that is created. So this high and this low becomes our trading range. That is to say, we are looking out to trade within this range, within this low to this high. That's where we are looking at to trade, right, for that particular day. So right now we see that price have broken structure to the upside, and price, what do we wait? We have to patiently wait for price at the move, the strong move that caused that push to the upside, right? The strong move that caused that push to the upside. That's where we are actually going to be waiting for price, right? Price will definitely come back there before it continues to the upside. So basically, we do see this on the chart every time. So as soon as price came back here and tap on this zone, push up, we got another break of structure, right? So this particular break of structure now is now a new higher high, right? Like we all know, right? So this is a new break of structure, and once price gives us a new break of structure, right, our high has changed from this to this. This becomes our new high, and this actually becomes our new low. Why? Because that's the low that caused price to break structure, right? That's the low that caused price to break structure. So the question now is, how do you map out the correct demand or supply zone? Like is to say, how do you map out the correct origin where price will be coming back before it continues to the upside? For instance, on this particular chart, some people might be mapping out somewhere here to take this trade, but price will liquidate them and still go in their favor. That's why many times you see people will say price hits me out and still go in my favor. It's because of this, right? Then here the same thing is applicable here. Somebody marks this as their demand zone and price taps it. As soon as price taps it and start going up, you'll be like, yes, price is in my direction, price is going in my favor. And the next thing you see is aggressive push, hit your stop loss, and then still go in your direction. So these are the things we need to understand when trading the forex market. So let's basically take this to the charts, because I don't want this class to stay for so long. So let's take it to the chart. So currently we are on this trade. I'm on this trade on GBP JPY, right? I'm currently on this trade. I hope it goes well, but from the look of the trade, it's really going to go well. So what am I seeing here? So we can see this last break of structure to the upside here, right? We see this last break of structure. Why did I enter this trade? Let me go to 15 minutes time frame, because 15 minutes time frame is basically my entry time frame. So if you don't know my entry time frame, go back to the channel, right? Just go back to the channel. You'll see a video I made of my backtesting, right? You see a video I made on my backtesting. I dropped everything, I explained everything there. So here we'll see that on lower time frame, you can see I mapped this out as a trap, because a lot of people will be trying to take this trade from here and they are going to be liquidated. This is a trap. This is called inducement or liquidity. For me, it's a liquidity, it's a trap, it's smart money trap. This place is where a lot of us will be trying to take this buy and putting stop loss below. But what the price do? You see the aggression that price used to clear up liquidity, and as soon as price comes to this zone, you see what happened. Price started ranging here because buyers are loading their orders. So at this point now, we see price is already taking off. So many times when you are marking your zone, I personally, how I map my zone, right? Let me show you how I map my zone. I tend to look at for number one, liquidity, number two, imbalance, and then my order block. So let's say market is in an uptrend, right? Whenever market is in an uptrend, we understand that there is, before price pushes up very aggressively, we do normally see candles form this way, right? So we usually see something like this, right? We usually see something like this. So this is a buying momentum. So price is taking off for a buy, right? Right here we can see that this candle have a small wick here. Let's say a small wick rejection. Then this one have a small wick rejection, and then this one have wick rejection. So basically, we usually see this on the chart. So for me, this candle that takes off this way, I know that this is not retail traders push, right? This is not a retail trader that push this. This is institutional candles, right? This is hedge funds candles. This cannot be an institutional trade candle, right? I know that something made this market to push up very aggressively this way, and that thing that made the market to push up very aggressively this way is what I'm looking at to join in the next push. So what do I look out for? As soon as price have given me something like this last candle before this push becomes my order block. This last candle will be, that is my demand zone, right? My demand zone. This last candle before this push will actually become my demand zone. That's where I'll be waiting for price to come back for me to enter this trade, right? Then number two, this gap between this candle and this candle is an imbalance. You see this gap? Quickly, let me delete my order block, my demand zone, so that you see this gap between this weak rejection here and this weak rejection here. This space here is known as imbalance. Some call it fair value gap, some call it market insufficiency, whatever grammar you want to use, but what you know is a gap. And this gap, this imbalance, markets will always come back to fill it, either in the future or in the present. Market will always come back to fill it. So once I have seen this imbalance and I have this candle here, this becomes my what? My order block. This is where I'll be looking to enter the trade, no matter whatever. That's where I'll be looking to enter the trade, right? Then the next thing I look at for is liquidity, right? I need price to take out liquidity before I can then confirm that yes, this order block is valid. So I said number one, imbalance, number two, order block, and then number three, liquidity. So when price is pushing this way, let's use this for instance. When price is pushing this way here, some people we are trying to buy this market from here. Some people we are trying to buy from here, but what happens? Price liquidates them because this is a liquidity level. For me, this is a pure liquidity level. I will be anticipating price to do what? To take out this liquidity level. This is liquidity level. Let me quickly mark that out. So for me, this is my liquidity level. And then here we have imbalance. Remember imbalance, and then we have our order block. So that order block is where I will be patiently waiting for price to come back. So let's go back to the trade I'm in. So looking at this trade I'm in, you can see what I'm explaining here, right? You can see this is a trap, which is that's the same trap I showed you below, right? That's a trap, right? Which is inducement or liquidity level. You can see it here, and you can see my liquidity level. I marked liquidity level there, right? This is a trap. I can't take trade from here. It's very risky. Why did I have to take trade from the lower? Why do I have to take trade from here? It's very simple, right? This is where this move started. Even though it got here and pushed very aggressively, this is where the move started. We can see this bearish candle, then this strong engulfing candle, and then another strong engulfing candle, and market continue to the upside. And looking at it, we will see very well that there is a very little gap. Look at it. You can see it, right? We have this gap here. We have this imbalance, this last week rejection and this last week rejection. So this black candle here becomes my demand zone. So this black candle here is what? Is my demand zone. That's where I'll be taking the trade, right? And this imbalance here is another confirmation that yes, this order block is what? Is valid. So this imbalance here is another indication that yes, my order block is what? Valid. Then another thing that validates it is my inducement level, or you can call it what's it called? You can call it liquidity level, you can call it a trap, you can call it whatever you want to call it, right? Basically, I call it trap. So this is a trap. Some people will say there is imbalance here, there is order block, and there is this here as liquidity. For me, no, it's not a liquidity, it's a trap. It's a trap. For me, I will have to wait for price to clear it out before it continues to the upside. So I hope this this video got you very, very well, and I hope you have understood how to map out the correct actual demand zone. So the same thing is applicable both in sell side and in buy side. The same concept, the same thing. All you just have to do, if it's a sell side, let's flip the chart. So if it's a sell side, still the same thing, right? Still the same thing. All you just have to do after price have broken structure, you mark out that low that caused that break of structure. You see here we have this is a break of structure. What do? I map out the low that caused that break of structure. That becomes my supply zone, and from there is where I'm taking my trade. You can see. I hope the trade is definitely going to go well. I hope so. I believe so. So that is it. It's as simple as not complicating anything, right? And like I said, I'm the trade, and the trade is currently running. I'm in the trade, and trade is currently running, and you can see the trade is running from my end. So let's flip the chart back to inverse. So you can see I'm on the charts, I'm on the edge, and the trade is currently running very, very nicely. So I believe it goes well, and let's see how it goes. So thank you for watching, and please, if you have not subscribed, please subscribe to my YouTube channel. Turn on the notification bell for educational content like this that will help to improve your trading. Like, I'm here to help you improve your trading, not to show flashy life and all that, right? We have not attained the level of showing flashy life for now. Our main focus is to impart the knowledge, the little knowledge of forex trading markets we have, to others, so that others can also use it to start benefiting from the market. So please subscribe, turn on the notification bell, and stay updated.